Good evening, everybody. Welcome to this evening's ACY Securities webinar, How to Trade the Head and Shoulders Pattern. My name is Duncan Cooper. Thanks very much for attending. Before we move along, if you can read through the risk disclaimer, that would be great. Right, let's move along. If you don't know me, then my name is Duncan Cooper. I'm a Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time trader. Primarily trading the Forex market now for more than 15 years and been mentoring clients for more than 10. If you want to contact me, my email is on screen there. As well, through the week, you can catch me at our website, acy.com Market News Time, where you get my analysis, as well on YouTube, ACY Securities Australia YouTube channel. And you can connect me if you want through the week on Twitter and LinkedIn as well. Those are my handles. And in our Telegram channel, I'm providing analysis through there through the course of the week or even on the weekend. I'm posting on the weekend for the week ahead. So if you want to get access to that, just contact Nathan Bray at acy.com. I'll put his details in the chat later. As well, if you want to get access to my chart layouts and templates for MT4 that I use in the webinar and in my trading, then just contact Nathan. He will set that up for you. So anything to do with the platforms, opening an account, just contact Nathan. I'll put his details in the chat later. He'll only be too happy to have a chat with you. All right, so let's get into tonight's presentation. Now, I presented this before, but that doesn't matter. Patterns, understanding what patterns can form in the market, have a clear understanding of how they form. They repeat all the time. They don't always work to profit all the time. It's worth saying that patterns repeat, but nothing repeats 100% accurately all the time. Okay, so sometimes you can be wrong. But if you can see clear patterns forming, then you should be trying to trade in the direction of the pattern direction. All right, so let's get into the head and shoulder pattern. Just read through this disclaimer. A few more people are coming on board. So for those that haven't read it, just read through it. All right, so we're going to go through what the pattern is. We will have a look at the live market and maybe review a few patterns that have been forming. What I do want to say is I'm going to show you in the presentation maybe the most perfect examples. Perfect looking example. I've got some chart examples that will show you primarily perfect examples, but the pattern doesn't always set up exactly perfect. Sometimes it's a little bit outside of the norms, but you will see the pattern forming slightly differently from time to time. And the more that you can see the difference of how it can form, the more you can obviously dominate in the market. All right, so we're going to cover these topics and we'll get into the first one. So the head and shoulders pattern. So this is what it looks like as a drawing. And the right shoulder usually forms opposite the left shoulder. So a little bit like the body, you have two shoulders at the same height and a head in the middle. Okay, but sometimes the right shoulder can be a little bit lower, a little bit higher, but if it's a perfect pattern, that's how it will look. And in a perfect pattern, we break the low here. We break the low to change the trend, come up to put in the lower top end of the pattern forms. But sometimes, as you may see in some of my examples, this area can be a higher bottom. I'll trade that area even if it's a higher bottom. Some people say, well, it's not pure head and shoulders, but if you can make profit from it, then I'll trade it. All right, so price comes up. Now what you want to see is that the head is going to form. I'm primarily doing this on a weekly, daily, or a 4-hour chart, looking for the pattern. It's going to form at a key resistance area or level. All right, price will come down, break the low. Then once you see price in this formation, it's broken the low, it will probably come up for a rally. So look to the height of the left shoulder. All right. Now, often as well, that left shoulder will form at the 62 level, 62% fib level, or the 79% fib level exactly, or sometimes it's in the middle of those two levels. Okay. Now, from a perfection point of view for myself, I like it when the right shoulder lines up with the left shoulder and the 79% overlaps perfectly. That's my perfect scenario, but doesn't always give me the perfect scenario that I would like. But if I have a choice, that would be how I'd like it to fall. All right, then hopefully price moves down from your right shoulder area and you should be looking to take profits at the 127 extension. Sometimes price will move a lot further down than that. So you'll have to work out where you want to take profits, but the 127 extension is always a good level. All right, so that's the pattern, head and shoulders. So here on the weekly chart, we come up to a level of resistance from back in time. See the resistance over here. So we come up and then we fall down. All right, now just zooming in so we can have a closer look. Still the same weekly chart. Drawing in the pattern. All right, there it is. And for price to come up here, this is a number of weeks. This could be, I count the candles, this could be a good at least two-month rally back up that way to coincide with that left shoulder. And if I draw the fib in, it's in between the 62 to 79% level. All right. Slavia asking me, some traders talk about the crown or broken crown patterns. I don't know if there's any difference between that head and shoulders because I've never heard of it. So I don't know. I don't know if it's the same thing, and I have to go and Google it. So I will just not say it's the same because I don't know if it is the same or not. All right. But it could be. I'm sure if you've Googled it and seen it, if it looks exactly the same, then maybe it is. All right. So there's a weekly example. And ideally, I like to be trading opposite the right shoulder. Sorry, opposite the left shoulder. Okay. Now, with this being a weekly example, you don't necessarily have to trade it right opposite the left shoulder. There'll be opportunities on the lower time frame to start to see a failure. But if you're seeing the pattern forming on potentially on the weekly chart, you'll then start to see a reversal on the lower time frames, and you can obviously pick your own style of entry as well, rather than just entering at a fib level or at the area opposite to the left shoulder. Okay. Now, when entering, if you're going to enter opposite the left shoulder here, so you're selling here, I would put my stop above the high. I would always put my stop above the high. Whether I'm selling at the 62 level or the 79% level in this pattern, I would always put my stop above the high. All right. And we can see here it moves down to the 127 extension. So this is a prime example of a very nice weekly pattern. To the daily chart, this is just showing, let me just refresh my memory. Oh, this is a fresh chart now. So here's a level of resistance where we come up. Now, sometimes it's the head that meets the resistance, and sometimes it's the left shoulder that meets the resistance. In this case, the left shoulder meets the resistance level over here. Then we get a false break of that level. And then here's the pattern, left shoulder. We move through, fall down, come back up to retest. All right, so really trading opposite the left shoulder is your entry here. And it's a little bit fractionally above the 79% level. So in this example, I would probably take this at a 79% level, stop above the high, just in case it doesn't get to the shoulder. And we can see that it moves down to the 127 extension, fraction short there, but over time it gets to there. And if you're trading this at a significant level, the pattern will often present at the final topping point. Or often the head and shoulder pattern is the final area where price has topped. Of course, there's a higher top over here, but often if it is the final topping point area, you can get a long-term decline. So you might not want to get out at the 127 extension if you feel like this is a final top. Okay. Cameron, yes, do I do many of the daily, or is the stop too big? Oh, it depends what the stop is. Like I don't use more than 100 pip stop. In this example, you wouldn't be using more than, this doesn't require more than a 50 pip stop. If you look at the fib numbers here, on this day chart. 79% at 122.37, highs at 122.66. So you don't need more than 40 pips here just to have your stop above the high. So it's not a massive stop. Sometimes if it's a massive stop, what I will do is I will start to wait for the pattern to form and turn around, and then I'll go to a lower time frame and get a lower time frame entry. All right, so I will, sometimes if it's a very large pattern like on a weekly, I will drop down to a lower time frame in the area to try to then look for my entry. All right, so there's your entry. You could be taking opposite the shoulder or at the 79% level in this case. All right, Aussie dollar day chart example here. There's a shoulder. Well, there's your level, level of resistance, shoulder. We try to move above that level of resistance, and then we trade back below. Now, in this example, the low here doesn't take out this low, but it still comes up to retest the level. And in this example, the purist would say this is not a head and shoulder pattern, but I will say it is this comes up to form a right shoulder to the left shoulder. And if you trade it at the shoulder, almost close to the 62% level, it would have been a profitable trade. Okay, now in this example, because you might feel like it's not the purest head and shoulder pattern because it's not coming up from a lower bottom, you should be aware that potentially, though this could still be a pattern, and look for failure here, and then maybe just drop down to a lower time frame to execute an entry style. All right. So I'm not always looking for the purest example where it's moving up from a lower bottom. I will take them from a higher bottom, looking for a retest failure to form a right shoulder opposite the left. All right, now in this example, sometimes you'll get multiple kind of patterns forming in the same area. So we come up to the same level here, first of all, and hold. But ultimately, we come up to false break. Then we fall down. Again, this is a higher bottom example. All right. For price to fail there on the right shoulder area at 62 level. Now as well, where this head is forming, I haven't drawn it on here, but if I was to draw it in and get my drawing tool, just for the purpose of understanding structure, this whole move down here, this is probably, or very close to, a 79% retracement on this range here as well. So you can, see maybe a 79% pattern forming. And within this structure here, you see a head and shoulder pattern forming. Okay, so you're combining patterns and structure all together. All right, this is a 4-hour example. So here's a level of resistance that gets formed. Just there. Now in this example, it's almost a triple top. This is why I said at the start, sometimes in the patterns I'm looking at, they're not the most purest head and shoulder patterns. Sometimes they can look like this, where in this area, first of all, that's fractionally higher to that side. So to me, I would call this a head and shoulder pattern, but it's not the perfect scenario of a head and shoulder pattern. And you can draw your fib in, and because this could just be a retest of resistance up here, it does come up fractionally short. So that is almost like a right shoulder, head, left shoulder there. You could just be looking at this scenario as a failure at 79% level to trade down, but yes, a rather awkward looking head and shoulder pattern forming, not the perfect scenario. So sometimes you'll get a lot of these when we're at a resistance level and the market keeps retesting a resistance level. You get a lot of these where that's a resistance level, we get a false break. This comes very close to retesting the resistance level, and then that scenario happens. Then as you move along on the chart, we get a little bit more of a more perfect forming head and shoulders in terms of, this is much more of a bigger head up here. This is your left shoulder now. So this imperfect head and shoulders here is now becoming a left shoulder, forming a head here. This right shoulder forms here from a higher bottom. All right, so there's the left shoulder, head, right shoulder. And it comes up in between the 62 and the 79. Ultimately, we're getting countless failures at or very close to this one resistance level. False break here that forms the head. This comes up for another test at resistance and then forms a pattern on the right hand side. So you see this happening all the time. And in fact, if you look very closely in here, get my drawing tool as well. All right, there's a little head and shoulder kind of affair going on here as well. Within the head, within the larger head, inside it, there's a little head and shoulder part forming there too. So you're going to see, if you get good at spotting, you're going to see them forming all the time in some form or fashion. You can see one here. Is it a perfect one? No, because it comes up from that low to form the head. All right, but then there's a higher bottom here. And it's very imperfect, but it is some form of a head and shoulder pattern. All right, let's move it along. Any questions? Just type them in. All right, I'm just checking what the pound dollar is doing on my other screen. Trading at the 121 level at the moment. All right, so there's an entry there at the 62. You could have traded at the left shoulder level if you wanted to. All right, let's get into the inverted. Now I call it an inverted head and shoulders because once it's formed, it's past tense inverted, but I'm sure you'll see that it can be called the inverse head and shoulders. So it's just a technical grammar thing, or however you want to call it, really. I just feel like inverted is the better name rather than the inverse, because ultimately it is inverted. Anyway, it's just an upside down version of the head and shoulders, okay? So we have left shoulder, head, right shoulder, upside down version, okay? Same exact rules and formation in that you want to see price coming down to a weekly, daily 4-hour support level on a weekly, daily 4-hour chart. You're looking in a perfect setup that we come up to a new high. Price then comes down opposite the left side low to form the right shoulder. And then ideally, yes, it's coming in opposite the left shoulder area here. Ideally, a 62 level or a 79% level lines up with that shoulder. Sometimes price is just in between those two levels when it forms. And then it moves up and your profit targets the 127 extension. Of course, price can move up higher than that. And just labeling things in there, left shoulder, head, right shoulder, okay? All right, so here's a weekly chart example. There's your level of support. Level of support is really coming from over here. Broken, resistance becomes support. It pulls back. False break. This pulls back to opposite, the same level. There's the pattern. We got to a fresh high up here. Pull back to almost pull back to the support level. This was a slight left shoulder here was a bit of a false break of that support level, but there's the pattern. And we come down just below the 79% level. We pretty much get almost equal to the left shoulder. We get equal to the support level that the pattern's forming on. And of course, price moves up. Okay. All right, here's another example. This is a weekly one. There's support. There's the pattern. We false break support and move back up. This time we move up. I mean, this is a higher top to these tops, but it's not higher to this key point here. left shoulder, head, right shoulder. Now, with all these weekly examples, you might not be trading right here. Okay, you might be waiting for this to start to hold and move up, but you become aware that a pattern's forming there, and then you're looking on a lower time frame for your entry. Ali for me is saying, should the left shoulder and the right shoulder not be the lowest, not be the closest lower highs to the high, i.e. the lower high immediate before and after the high? Not necessarily. It can be, but I'm showing you, what I'm trying to show you here is, yes, there's that perfect scenario that you're discussing where it's just one low, then the head, and then another low, but the pattern will often form in various formats. So I'm showing you examples of how you can extend that pattern to be profitable in the market. Okay, so you might say, well, should it not be this low here, the first low? I'm just showing you how things can transpire and look like a head and shoulders pattern as well. So Cameron, on this weekly chart here, you might say that if I was entering here for this potentially to be a right shoulder, the risk on the trade putting your stop below here could be too great for you. All right, so if that's the case, just monitoring how price is forming on the weekly chart. If a pattern is starting to form on the weekly chart, you don't need to be getting in here. You can be waiting for the formation to happen, and then the fact that you can see that that pattern's forming, and yes, it could well then be leading to a good 300 or 400 pip move, then you're just moving to a lower time frame to looking for a setup in that direction of the pattern. All right, so you don't have, on a bigger pattern where you may have to be setting, if you're trading down here at 118.62, you're needing to put your stop more than 200 pips away to get below this low. So that may be too large of a stop. So then you go, okay, well, I can see the pattern forming. How can I get in? So then look to some of your other entry setups to get in line with that pattern unfolding, okay? All right, so there's an entry there on support or at the 62% level. I mean, you could enter here with a 100 pip stop and that would work, but my preferred option trading this pattern would be to have it below the low. But if that's too many pips risk, I'll have to structure some other kind of style of entry to get in as I'm seeing the pattern unfold. All right, this is a day chart example. So here's the level of support. It's really coming from this area here. All right, in this example, we get it. The head is the false break of this level of support. We have a low area here. And we move up to a high point there. Then we have this retracement. This forms opposite there. All right. Now I know there's a swing high here and the swing low is coming down here, but I'm just drawing the pattern over the major swing ranges here to show you that, what is happening. Drawing the fib in, we get a fraction short of the 79% level, but that right shoulder is within a pip or two being completely opposite the left shoulder here. And then we start to turn around. Now, yes, when it turns around here, this day chart trend is lower tops and bottoms. Now, you might want to wait for higher tops and bottoms to form. We get a higher bottom forming here. And then you're trading in the direction of the trend this way, knowing that the thing that's pushing the trend up is the formation of this head and shoulder pattern here. All right. But you can be getting in this example here, you might be taking at the 62% level, or you could be looking opposite the left shoulder, or you're simply waiting for the pattern to form and then you're looking to a lower time frame for your entry. You're looking for the pattern to form to show you a clear directive change in trend from that level of support. And then, this move up here is like 2 months long, give or take. So once you're seeing this pattern forming at this level of support, that false broke. Once you see the pattern formed, any intraday trading that would be doing, any kind of 4-hour continuation patterns that I might be seeing form, I'll be taking all those in line with that pattern forming, trading up to the 127 extension as a possible target. Okay. All right, so here's a level of support. In this case, the level of support is where the head forms. And here we get well, the right shoulder here actually forms with a minor double bottom opposite the left shoulder. So sometimes you get a pattern within a pattern. Going to be covering double tops and bottoms in the webinar coming up, but here is a double bottom forming, and at the same time it's where the right shoulder forms. And with this day chart pattern forming here and a double bottom forming here, there's a 2 or 3 month run up here. So often when you see these patterns form, it's the start of a major trend, be it up or down. All right, so the pullback is just beyond the 62% level. So you could be trading at the 62 level, stop below the low. You could have been looking to trade opposite the left shoulder area. And there the pattern forms. All right, down here at the bottom, this is for our example. The head is forming on support. So here's your left shoulder. There's your head. The right shoulder, it almost gets down to the head. That's why I say sometimes it's not perfect. It can be an imperfection. All right. A little bit later, we pull back to put in this kind of bottom here, which is almost opposite the left shoulder. All right. So there are different looking patterns. The more you spend time looking for this head and shoulder pattern, you are going to see variations of what is happening on the right shoulder side. Sometimes here we can see the left shoulder area is a double bottom. Keep going. All right. So what I was going to say before I was cut off was sometimes when the pattern's forming, this left shoulder, which is here, this left shoulder is actually an area of consolidation. All right. So you will often get structure forming within the pattern. There's some structure. And then we get a bit of a false break. So ultimately this becomes the head. All right, so that's really a false break of this consolidation down to this level of support. We move up, and then the right shoulder here does try to have a go at the head. But then, over here, you could call this a little bit of a right shoulder as well, even though, it's down here. So sometimes it can be a little bit imperfect. You get structure forming where here, this could be classed as the right shoulder, and then we come back down to form a higher bottom, which is pretty much opposite the left shoulder area here before moving up. So the more that you understand how price structure forms, and you can see it clearly, the more you can start to think about, well, is there a head and shoulder pattern forming here? It may not be the perfect looking setup, but it kind of will work the exact same way in terms of where price, ultimately you want to be able to see what price is doing, and can it tell you a story that you're getting a reversal? All right. So this may be not the most perfect looking example, but for me, I would start trading like a head and shoulder pattern, or have at least the anticipation that we're going to move this way as we start to reverse. Okay. Because ultimately it doesn't matter if it's a perfect head and shoulder pattern or an imperfect one. What matters is that when you're doing your analysis, you can predict more times right than wrong if you're getting a price reversal, and then can you get in on board and trade in that direction of the reversal. Okay. All right, so here, if you just trade at the 79% level, which is a little bit short of opposite the left shoulder, that would have worked fine. Stop below the low. It wouldn't have taken you out. You may have sweated over this, but that's why, you know, trading at the 79% level or as close as you can to the left shoulder, stop below the low. Often price will come relatively close to the head, but doesn't take it out, doesn't take your stop, and then you end up with a profitable trade. And I can't remember how many trades I've had where I'm getting in maybe that 79% level close to the left shoulder, and then it almost takes the head out, and I'm thinking I'm wrong for sure here, and then I'm not, and I'm profitable at the end of the day. All right. Olivia May is saying, can a head and shoulder pattern not form on the 1 hour chart? Yes, it can, but in terms of patterns, they're always going to be stronger and give you stronger moves if you're trading on the higher time frames. But yes, they'll form on a 1 hour chart, a 15-minute chart, a 5-minute chart. But in terms of the strength of the move, you're always going to get a stronger, longer move from a higher time frame, okay? Right, here's another 4-hour example. So here's a level of support. Support on this 4-hour chart is really coming from this area over here. So we come a fraction short. Warren, you asked me how far below the head, how many pips? Well, if you're not having to risk too many pips, I would probably put my stop below, say 10 pips or above 10 pips. If I'm risking a lot of pips, I may just be going like 1 pip plus a spread. All right, so in a nice, comfortable world, let's go 10 pips below. But depending on how many pips you're risking and how you're managing the risk on the trade, you might just want to go 1 pip plus a spread. You know, if you're having to risk like 100 pips, then I probably don't want to risk 110. So if 100 pips just gets me 1 pip plus the spread underneath the lower the high, great. If I'm only risking 40 pips to, you know, just to get underneath the head here, well, I'm quite happy to risk 50 pips and give it a bit of room, because sometimes, yes, price can just trade underneath the head or above the head and then turns around and forms kind of a double bottom. You just get taken out and then it goes up. All right, so 10 pips below or above would be a nice rule, but it all depends, you know, how many pips are you risking. So yeah, 10 pips would be ideal, just in case you get a very minor false break. All right, so here we get a fraction short of support where the head forms. This is pretty much a perfect looking 4-hour chart head and shoulders. It's just a low here to a lower low. We come up to a higher high, come down to form a higher bottom. There's no ambiguity of forming some more lows here on the right shoulder. 79% level is perfectly opposite here, the left shoulder. In this scenario, if you were just simply looking to trade right at the left shoulder here, you would miss out. If you were prepared to watch and see a reversal on a lower time frame, you could be looking to get in there between the 79% level and the 62 level. All right, so it all depends how you want to engage. If you're purely engaging here, just simply putting your entry at the 79, which is perfectly opposite left shoulder here, you wouldn't get in. So then as you see the pattern forming and you're not in, you may then want to look at how can you get in on some form of a dip. We do get another retest down here. This time it just comes down to retest 62% level. So at times it's a question of watching what price is doing. See here, it doesn't get down to the 79% level. On a further move down, the 62% level starts to act as support. All right, so ultimately the buyers are coming in ahead of the 79% level the first time, and then pretty much at the 62 level the second time. So then you'd need to make a judgment about how you're going to get in here. And yes, Warren, in this example, because this head is fractionally above support, price could come down. You know, if we haven't quite got to support, there's always a chance that price could come down to test the support. So yes, in this example, it would be a perfect example of having you stop 10 pips below support so that if we did retest support, you could still survive. Because if I draw, that's a very good question or answer you gave me. If you have a level of support here, and it's always better in my mind if the kind of left shoulder hits support, this becomes a false break for the head, and then the right shoulder is coming down to retest support to move off. That would always be the perfect scenario, because then there's less chance that price is going to get down to here because this head formed on a false break. All right, but when the head's kind of forming where the support level is, there's always a chance you're going to get a false break at the head. So yeah, being 10 pips below would be a better trade management approach. But I mean, price can always move through 10 pips and take you out, and then reverses. The market is always ultimately, there's never a perfect way of avoiding that false break and stop out. But yes, using a 10 pip stop below can avoid it. But I'm sure I've had it, more than once or twice. I'll have my stop 10 pips above or below an area just for that false break kind of scenario. And I still get taken out, and then it goes the way I was anticipating. So the market is always clearly right all the time. And sometimes it will work very friendly for you. Other times it won't. And that's just the way the market runs, and you just have to accept it and keep moving on to the next trade. All right, so here, trading at 62 works great. If you trade at the 79% level, it wouldn't work great. And your philosophy trading the head and shoulder pattern could be that you understand the pattern. All right, so I don't know if there's any more chart examples. There's not, so let's just go back to the pattern, the inverted one. But the same conversation can be applied just to the normal head and shoulders pattern. All right, the right shoulder is going to form potentially opposite the left shoulder in a perfect world. All right, and that can be in between the 62% or the 79%, or it can be exactly at the 62% level. It can be exactly at the 79% level, or it can be in between. Now, sometimes it's in between. So if you want to make sure for yourself that you get in every pattern that you want to trade, you've got more chance of getting in by simply entering at the 62% level. So I get my drawing tool. You've got more chance of getting in every time if you have this fear of missing out, is simply take it at the 62% level every time. And stop goes, say, 10 pips below the low. Just so if you get a bit of a false break, you might not get stopped out. All right. That's if you want to be getting in all the time. Look to get in at the 62, stop below the low. You'll be getting in more times. All right. However, let's say this area is a 79% level, or you take the approach that I just want to trade the 79% level all the time. By getting in the 79% level, that helps you create a risk reward. Simply trading up to the high here by getting it at 79% level creates a risk reward of 1 to 3. All right. Trading up to the 127 extension level creates a risk reward in excess of 1 to 4. So by being prepared to trade at the 79% level and being prepared to miss out, actually improves your risk reward scenario immensely. Because then your risk reward scenario, if you're just taking profits at the high here, is always 1 to 3. Whereas if you're doing it at the 62 level, it's more like 1 to 2. So I don't really worry about not getting in. I'd much prefer to have a great risk reward setup and miss out a few times rather than lessen my risk reward. Okay, so, but it's each individual, has to work out for themselves. I don't mind if I miss and don't get in. There's always another trading opportunity, tomorrow. In the Telegram yesterday, I highlighted 2 trades on the Aussie yen and the Euro yen. One on the Euro yen was looking for a retest of 142.55 and price didn't get there yesterday. And on the Aussie yen, I was looking at the 91.91 level up to 9200 level, and price traded into that level yesterday. So sometimes, a level I'm watching won't get traded at, and so I can't trade it that day. On other days, maybe both the levels that I'm watching will trade. So, but what I'm really always concentrating on is getting the best risk to reward, because I have losses like everybody else, okay? So the way that I can claw back those losses and keep myself profitable is always constructing the best risk to reward scenario all the time. So the head and shoulder pattern trading at the 79% level, or trading a pattern where it's not the most perfect looking pattern. There's your support level. All right. And we have a head and shoulder pattern, which is, you know, very much like this, which is less than perfect. But by trading as close to support as you can with the stop below here, you actually may be getting in below the 79% level, then price moves up and you maximize your risk to reward. All right, so sometimes the most imperfect looking patterns offer you the better risk to reward than a perfect looking pattern, right? So don't just veto it because it's not perfect looking. Always consider what is your risk to reward. All right, that's the most important thing. All right, so let's have a squeeze at the market. What has it been doing in recent times? So let me get rid of my drawing tool. I'm drawing everywhere at the moment. I'll put in the chat, I'll give you this presentation so you can go ahead and review it. As I said before, if I could trade one pattern, it would probably be the 79% fib pattern, but combining that with the head and shoulder pattern, so you're just trading the head and shoulders with the 79% fib pattern, is an exceptionally profitable pattern. All right, so I'll put that in the chat for you. I've given you Nathan's details if you want to contact him. And the link for that presentation is there. All right, so let's talk about the Aussie yen. Now, if you've been catching my webinars, last week's webinar about reviewing what happened the month before, I talked on the Aussie yen about the 79% level. How many times has that been showing over recent months? But it also has been combining with head and shoulder patterns. All right, and here's a day chart head and shoulder pattern, okay? I've kind of already colored it in, but there's the left shoulder. We've moved up. Now this is a higher bottom pattern. It's not coming up from a lower bottom pattern. But this failure, well, this is level of resistance here, 91.91. Don't really need that fib. There's your daily resistance where we moved above, we false back below, came back up to test the exact level of the left shoulder. All right, and the 62 levels here and the 79% levels above. Now, if, as I said just saying before, if you just trade at the 62 level, stop above the high, the head, you're in at the moment in profit. Okay, it's not great profit at the moment, but you're in some form of profit. If you're trading at the right shoulder equals the left shoulder, you would be in yesterday, and you would have seen 100 pips from that level, I think, moving down yesterday. And you're still in profit right now. If you were looking to trade the 79% level, you wouldn't have gotten in. All right. And I was looking to trade up here in between 91, 91 and 92. And yes, I wasn't looking for a head and shoulder pattern to form at the time when I was doing my analysis, but I can clearly see that that's some form of pattern may be forming right there on the daily chart. Now, there's a daily chart perspective at the moment. So is a head and shoulder pattern forming there on the daily chart perspective? We'll have to just wait and see if it runs out to fruition. Now, if we drop down the 4-hour chart, what do you see on the 4-hour chart? Where the right shoulder could be potentially forming on the daily chart, on the 4-hour chart, that right shoulder is potentially a head. So you have a little left shoulder here. All right. Then we've dropped down to a lower bottom. Okay. Now we haven't quite met the left shoulder yet. We've been a few pips short. But if you trade at the 62 level, you're in. If you're looking to trade at the left shoulder, at the moment, you're not in. And if you're looking to trade at the 79% level, you're not in yet. Now, price might go higher today and still give you the opportunity to trade at the left shoulder here. or at the 79% level. Okay, so it is ultimately your decision about, are you trading at the 62 level, are you trading at the shoulder level, or are you trading at the 79% level? All right. That's why I was saying, if you always want to get in, the 62 level is the better level, because I'm showing you two examples here, one on the day chart, one on the 4-hour chart here, forming over the last few days, that both 62 levels will work for you. Trading at the head, at the left shoulder area on the daily chart perspective would have worked. Trading it here today on the 4-hour perspective wouldn't have worked if you're just trading opposite the left shoulder. It hasn't quite got there. You know, in this scenario, I would probably, be looking at the 79, and this might be one of those days where I don't quite get in. But getting in at 79 gives you the best risk to reward. All right, so you have to try and get past the idea of fear of missing out. I would much prefer to be trading at the 79 here, maximizing my risk reward. And yes, occasionally I miss out. So there's a possible pattern forming there. So two patterns forming there at the moment on that particular pair on different time frames. All right, let me just click through. One, we'll sort of insight on the dollar yen and the Aussie dollar. Let me just go through a couple of patterns, and then we'll have a quick wrap up on those two pairs. Now the pound dollar. All right, I just want to go through a head and shoulder pattern scenario here that's kind of it's not a perfect looking pattern from the top here, but we've had this weekly double top forming here. All right, at this 62% level. We have back in time on the monthly chart, a monthly old low here that's offering some resistance here too. So there's lots of tools I'm using here that is showing an area of resistance. And then as the market starts to hold there on the daily chart here, we get, this is a head and shoulders from a higher bottom scenario. See how we get a little left shoulder there. We move up to put a head in. It's a little of a false break here. We move down, we come up, pretty much form the right shoulder exactly opposite the left shoulder here. I'll drop it down to the 4-hour chart. There's the head. That's where it drops down to. That's that left shoulder I was just discussing there. There's your head. And it comes up a fraction short of the left shoulder. All right, it comes up a fraction short of the left shoulder there. But if you're trading at the 79% level, you would be in, and the move continues down. Now, what I can also see is, Aloof may asking me about the 1-hour chart. So that's an imperfect looking one on the 4-hour chart, but for me, it is a head and shoulder pattern in the way I will trade it. All right, I was discussing up here a potential failure at the 12400 level, and that was where that right shoulder was kind of forming. Now, Aloof may ask me about the 1-hour chart. Kind of pattern form. I can see that there's a 1-hour chart pattern here. So if we go back in time to the 1-hour chart in that area, it's here. Left shoulder, head. I'll then have my fib drawn across that range. There's your 79% level. And here's your right shoulder. All right. And we actually come up for another test of the same level over here. So sometimes you can actually get, in fact, you might say that, well, isn't that a right shoulder there? There's actually 3 right shoulders forming there to that left shoulder and the head. All right, so sometimes that's the way it'll form. All right, so getting very down and dirty with the pattern, sometimes you can see a number of tests where the right shoulder's forming. All right, so you've got the same charts as me. You can take screenshots of it. The more you see this kind of formation scenario all occurring, the greater opportunities that you're going to see in the market to trade, aren't you? All right. Or let me just have a Might have had another pattern that I saw form or not. Let me just quickly. It's worth discussing the euro dollar. I don't know if this is going to form yet, but in my mind, where we've had this major collapse up here, here's the left shoulder, here's the head. So your right shoulder would be up, would obviously be all the way back up to the left shoulder if we got there. So this is something to monitor at the moment. There's your left shoulder. There's where the right shoulder could form. All right, now whether or not we can get up to that level, I don't know. Okay, but something that's a pattern, you know, that screams out to me, is there a head and shoulder pattern going to form there? It all depends if price can get up high enough. All right. All right, I'm going to call it a day there on the head and shoulders. So you've got countless examples there. You asked me about the Aussie dollar. Well, a head and shoulder pattern could form on here as well. It would be a very imperfect one because this left shoulder is very close to the head here. But at the moment, we've had a complete failure at this weekly top. All right, a very, very aggressive sell-off last week. This could be the final top. Day chart trend is down here. At the moment, I'm just monitoring. We may well fail here today at this 69.84 area. I was looking at 69.84 up to 69.84 up to 70 today for failure. We've been up to 69.95. If we don't fail there, we could move higher up. 62 level there. Okay, overlaps with, if you move to your 4-hour chart, there's 4-hour broken support there. So price may actually stop where we are right now. It could move up to there. Or if we get an immense rally back up, we could actually come up to back up here. We could form some form of left shoulder, head, right shoulder if we came all the way back up to where we failed. That's my insights there on the Aussie dollar. Dollar yen. It's very interesting. I was thinking that maybe we would hold on top of this day chart support here, but we haven't been down there yet. But over the course of time, recently, this is weekly resistance that was here, 130.40. See how it's all resistance through here? We've moved above, so potentially 130.40 now is support. Now, yesterday we got fractionally ahead of there. Support, came in on all these 4-hour tops that we're rejecting. So when we were underneath 130.40, it was all resistance, 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 resistance. We've moved above, and now we're actually getting support on top of these 4-hour highs. So I'm very much favoring that this could be support here to move up. You can watch that for reversal. It moving below 130.40, back to the day chart here. This has moved to an uptrend, higher top. So this is a retracement back to support potentially for a move up. So if the uptrend is going to hold and continue, it must hold above 130.40. Getting back below 130.40 is not great for the buyers. It changes it back to the sellers. Slav, you're saying about an imbalance. There is an imbalance. Yes, that could. There's an imbalance in here that could get filled. But if we are going to remain bullish, then this 130.40 level needs to hold. All right. And then pairs to the US dollar, like the pounds, the pound dollar is moving up at the moment. The euro dollar is moving up. Aussie dollar's been moving up. New Zealand dollar's been moving up. We're having a little bit of a correction from last week's move. But really, if we want to keep the trend in play that was started to form from last week on this dollar yen, we really don't want to be getting back below 130.40 with any conviction. It's okay to trade underneath, but we don't want to be closing below there. All right, so you can see we're getting down to that level of just drawn in. So Now, monitoring this for an opportunity to see a reversal back up today would be, wouldn't be a bad idea. So it's hitting the support area at the moment on the 4-hour chart there. Can that support area hold for a move back up? All right, so hopefully that helps you there, Warren. All right, any final questions before we wrap it up? Tomorrow I have got live market analysis, so we'll see. We will revisit this pair tomorrow in the Aussie, see how they're unfolding. Slav, you're saying the UK 100's reached and made a double top. I'm not sure on that. We can pull it up, just have a quick look. I know some of these indices are definitely at topping levels. We will have to wait and see what happens over the next couple of weeks. All right, well, the UK 100, is at the all-time high there, isn't it? I'm guessing that's the all-time high. Yep. Can it take it out or not? If it can't, we may well see a very nice reversal. So it is worth monitoring that. It's looking pretty bullish though there at the moment on the weekly. And the day isn't yet telling us it's going to reverse. In fact, that's one of the most bullish stock markets that we've got at the moment. It's testing obviously the high there at the moment, trying to move through. I know Slav on Monday in our Inner Circle webinar, we were looking at the German 30 at this 79% level, and that's still trying to move up and through there. ASX 200, there's a triple top up here. Are we holding here? So we are definitely lofty highs, areas where the stock indices can definitely start to turn around in conjunction with each other. So it will be an interesting time over the next couple of weeks. Do we break above and through, or do we start to see a significant reversal on those pairs? So of course, we've had a very large movement down on gold. It's having a 3-day reversal at the moment. So that was a very hefty correction on gold there. That may be a final top there for a while. We'll have to wait and see. All right, so hopefully you got some good value from that Head and Shoulders. With all these patterns, all the information that I share with you guys and girls, the only person that can make it work is you by putting in the time and effort on the charts. What do you, I'm going to go take you through some other patterns over the next few weeks, which I've been through before, but what pattern or what trade setup do you see the easiest? That's ultimately what you want to trade. And hopefully it's a pattern that offers you a good risk reward, because every trading setup, every pattern is going to have its losses. So you need good risk to reward scenario on the setup that you're trading to cover your losses and maximize your wins. Okay. All right, so coming up tomorrow, we got market analysis at 8 p.m. Sydney time. Just head over to the webinar page to register your interest if you want to join me. Okay. And other than that, have a great evening or a great day wherever you are. Thanks very much for hanging out with me. And I look forward to seeing you next time. Thank you.